Everybody, welcome back to Liquid Lunch, powered by CryptoQuant. Okay, CryptoQuant, of course, is a data and intelligence platform built to help the adoption of crypto worldwide. And so, if you're not familiar with CryptoQuant, we welcome you. We want to ensure some great value out of these webinars. And so, check out our website. Go to CryptoQuant.com. Today, with me, we have our head of business development, Benjamin Brannon. It just seems like every week is getting more and more intense in what's happening out there, Ben. And so, I'd like to get some of your comments on what's going on lately. First of all, we've got CZ getting arrested, right? Like the CEO of Binance literally gets arrested for violating the Bank Secrecy Act, right?
Yeah, I think that kind of sped up faster than we thought, right? I know we all were aware of CZ and the issues he had with the DOJ investigating Binance and some previous activity there, but I think it kind of sped up more than usual. But honestly, the outflows and stuff, and Julio will go more into this, but the outflows were not as dramatic as maybe we thought. So potentially Binance, at least Binance as an exchange, will make it through.
We've got some other exciting stuff. We got Saylor, the psychopath. How many more Bitcoins did he buy today, Ben?
He bought a lot. There's a few psychopaths in the market these days. I think 175,000 Bitcoin now, something almost 175,000 he has. Depending on how you slice it and depending on how many coins we expect that have been lost, let's say there's 13 million coins left, something like this. He's approaching 1% of total available supply. So is that a centralization issue? I don't know, but if BTC reprices everything, then potentially it could be.
Yeah, it's interesting, right? He's gobbling up more, he's issuing out more equity to buy more Bitcoin. And so the derivative of his stock is basically Bitcoin at this point, right? He's got sitting on 6.5 billion, and he just keeps buying like a psychopath. Thanks for hanging, Ben. Appreciate your comments. And yeah, let's get into the research portion of this. And so again, guys, we like to make it a little bit fun, but we also want to give you guys some alpha. We want to give you guys some research from, our head of research, Julio Morena, is here again. And so we're going to be talking about some of the different things that happened with Binance and with the reserves and how that went down after, right, he was arrested and had to pay the fines to do that. So
here we want to show what's the effect that news has had on Binance and especially from the perspective of the on-chain data to in the exchange on-chain data in reserves, in flows, also in trading volume. So we're gonna see a little bit of that data and how it has been, Binance throughout the year has been, into some regulatory pressure, right? And so the effects that it has had on the exchange and how this data has changed over the course of the year. And so first here is reserves. So Binance reserves, Bitcoin reserves. And so it's basically what we track on chain about exchanges. One of those is reserves, which are user deposits. And so we can see if users are depositing into the exchange or withdrawing to the exchange and how this evolves. And you can see here how this, so first thing to notice is that the reserves are down to the lowest in a year. And you can see how different events that had happened in the last year have had an effect on the reserves. We have December of last year, after the FTX, we saw also some pressure to reserves, Binance reserves, after they reported the proof of reserves. So they got a little bit of backlash back then. And so we saw that effect here. Then it come back, the reserves, more deposits. And then we've seen basically since June 2023 that the SEC lawsuits on Binance, I think it's by Binance US. And so, but it has an effect on Binance as an exchange. And we can see that the reserves start to trend downwards since that, right? Since that event. And so you can see this, the latest effect on reserves after the DOJ ruling. And so they caused also Bitcoin reserves in Binance to drop to the lowest in more than a year. That's from the research side.
And this is just the Binance reserves, correct?
Yes, just Binance reserves.
So we also
Bitcoin.
see like a downtrend in like all the exchanges in their reserves overall, correct?
Yeah, for the overall exchanges that we track, yes, but we have seen for some particular exchanges reserves going up, like for OKX, for example, or Bitfinex. So we are seeing that those exchanges reserves increasing, and so it overall, yes, the reserves have come down for exchanges, but some of those exchanges have actually experienced increase in reserves. But for Binance, I think it's a lot of it related to the regulatory pressure that it has endured this year. Yeah, so and just to give some comments about reserves. So it's not every time that you see like reserves decreasing in an exchange, it's not gonna be like people always think oh, it's something like FTX happening again if you see that, right? No, it's just the reaction of users, the reaction of maybe some market makers, just pulling out some of their funds just to wait and see. And so when there's more volatility, so it's just that monitoring that those kind of movements, and in terms of liquidity also, like decreasing reserves could mean also like, okay, there's liquidity pulling out right from this exchange, but it doesn't mean like it's just gonna it's gonna collapse like FTX, because a lot of people always make that assumption, and that's not the case. Just want
Right.
to be really clear on that.
Right.
And so we also track transactions being the number of transactions that are being deposited into exchanges. And so also as for reserves, we can see how lately also the number of deposit transactions into Binance has fallen to also low levels. And it's the same as with reserves, like, okay, people are maybe being a little cautious into depositing into the exchange, right? That's what with the data is also telling us. But also, as you mentioned with reserves, deposit transactions to exchanges on the aggregate are also down, this year to lows. So it's not just Binance, just to be more clear about it. And so we saw that those type of metrics, and for exchanges, to manage the risk, a lot of our clients are hedge funds or are investors or prop traders, and they do have like their funds in exchanges, in centralized exchanges. And so to manage the risk of being exposed to centralized exchanges, we developed this exchange risk monitor, in which basically we are telling what type of data you need to be looking at to manage this risk. So you need to be looking at reserves, you need to be looking at flows, which is the movement of Bitcoin out of in the exchange, and then also trading activity. And those three types of data have their own specific metrics, right? Like we've seen reserves, we've seen deposits, transactions, we would see like flows and trading activity. And so how can you build, this is like a blueprint so that people and investors or institutions can build an exchange risk framework, right? To manage that exposure.
Yeah, so we're even seeing insurance companies, right? Like, crypto insurance companies, this data is starting to become important to them as well, because they have to insure some of these exchanges and traders from this risk. Having that data for them as well, I think, is important as we move into this new realm.
Exactly. Yes. And so let's take a look at first at reserves. But we saw first like reserves in nominal terms, right? Like the number of Bitcoin, right? But I think when you look at reserves and the evolution, you need to be looking at them relative to something, because it's not the same like exchange reserves. If you have only like, let's say 10,000 Bitcoins in reserves, and they fall by 5,000 Bitcoins, so that's a 50%, right? It's not the same as if you have more reserves. Like Binance has a lot of reserves, and so the outflows will be high, large in terms of Bitcoin, but that's because they manage a lot of Bitcoin. So one metric that we develop is looking at reserves, but as a percentage of how much they have experienced a drawdown from previous all-time high. So that's what we're tracking here, and so you can see like when we were like in 2020, if this metric is close to zero, it means like the reserves are near or at fresh all-time highs, right? And when we see a drawdown, it says like, okay, reserves are going down from the all-time highs, and you can then put a relative number on it. So you can see how how it moves with different events, market events, like
Right.
when in May 2022, when we saw the Terra Luna collapse. So this is for Binance, like the reserves fell from all-time highs like 50%, right? And then they recover again and go to a new fresh all-time high. And then there comes the FTX collapse, and also, this is the move of liquidity in and out of exchanges. And then, but what we've seen, in the past year, with this regulatory pressure on Binance, is that reserves are down now 20% from all-time highs. And so that's, it's basically the largest drawdown since it's to October 2017, something around that. So that's some metric to keep an eye on how reserve will, if they are going to to come back.
Go back up. That's a good indicator, right? Like, are they going to fulfill their reserves back to where they previously have been? It looks like they always try to do that. So yeah, it'll be interesting to take a look and see what happens with that metric. Interesting.
Yeah, exactly. And you can also, this is for Binance, but you can also, with this metric, compare that between exchanges, right? And so you can see how different or how similar they're behaving between exchanges, right? And so just to get some context for Binance, which is here the purple line for this same metric, and with FTX, right? You see how Binance reserves move more organically, would say, like, okay, they of course every exchange experiences like drawdowns, and then you go back up again, and then we have some up and down movements, but it seems organic. And so if you look at FTX, which is this red line, you see how it's really erratic, right? It's all over the place. And of course now we know like why was that the case, but interestingly, you can compare that, and so a lot of analysts have seen and read, and a lot of people that say like over the past year, like, oh yeah, Binance is the next FTX. They're commingling funds, or a lot of people saying a lot of stuff that is not, from my perspective, not backed by data. And so if you look at this one, you say, I mean, it doesn't look like that, right? They're not like just moving around the Bitcoin they have from the user. So that's another thing that you can differentiate, like between exchanges. Okay, how their reserves are moving, right? And this metric makes it comparable because there's different amounts of reserves in exchanges, able to compare between exchanges. So yeah, just to keep in mind that.
That's a cool chart because FTX was actually like they were sending that Bitcoin to Alameda and other places that were customers' Bitcoin. So Binance looks like a much more solid company to where that you don't really see those huge reductions in their reserves, and so it's just kind of more indication that Binance is probably going to be fine, even with all the the drama that has happened recently.
We can also show like this is Bitcoin reserves for all the exchanges that we track, and you can see like how Binance remains even today like the largest holder of Bitcoin reserves between exchanges, among exchanges. And so that's something that you can also be like comparing if Binance were to experience more drawdowns, right? And so, and this is just to be clear, this is user deposits, right? Because some of these exchanges also have like custody, Bitcoin in custody services. So this is not shown here, but it's just like in their exchange, and this part of the company. So also,
because Coinbase like holds a lot of other people's Bitcoin.
Yes, exactly, in custody. So it's not it's not part of the exchange reserves for trading, right? And so in a short-term period, this is also what we're seeing with Binance. So this is again the same as this is like actually outflows, right? So customers withdrawing from the exchange, but relative to reserves. So because remember that I told that when you're analyzing flows or reserves, always make the analysis relative to something, right? Otherwise, just the nominal numbers will not tell you, the whole story. It's better to see it relative to something. So this is outflow. So net flows it is, but when it's below zero, it means that the exchange is facing withdrawals, right? More withdrawals than deposits. And so when it's positive, it's more deposits than withdrawals. And so Binance is this orange area. And you can see how, when there's has been other events in the last year, we've seen the same, like, okay, some people pull their funds out, right? And then they come back again. And so we saw that with the FTX, after FTX, and then they come back again. And then there's deposits, net deposits. Then after the SEC lawsuit, also this. And interestingly, like after these, so far after the DOJ ruling, it's not as much as in past events, right? But still it is larger than other exchanges that haven't experienced that. Yeah. And then from the trading volume side, we've seen, like, this is Binance, this purple line. So this is spot trading volume for Bitcoin in each exchange that we're showing here. And so Binance is in terms of Bitcoin is the biggest one, right? But trading volume has been declining. And interestingly, after this DOJ ruling, for the first time since June 2020, Binance wasn't the largest player in Bitcoin spot trading volume. So OKX and Coinbase saw more trading volume than Binance after in the last week. This is weekly trading volume for spot Bitcoin. And so we've seen that, like, also that effect in terms of trading volume. And so what's really interesting to notice that this happens after the DOJ, right? Or in this context that Binance is in now. And so, yeah, also, trading volume, also important to monitor in terms of, how much trading volume is in the exchange and also relative to reserves. I'm not showing that here, but we also have that metric as part of the exchange risk monitor, because just to give you some context, FTX had, really large trading volume, but if you measure trading volume relative to the reserves, so it was huge, right? Because they had no reserves. And so other exchanges show a more trading volume corresponding to the amount of reserves they have, right? So that those two also play, and you can be monitoring that to see, like, okay, what's going on here in terms of trading volume, right? Is there much, watch trading, or is it maybe, reserves don't justify this trading volume, right? And so, yeah. So, but here is just plain spot trading volume, and just wanted to point out that effect of in trading volume after, all this regulatory pressure that Binance has been in the last year.
Okay, great. And so let's get into, like, the alpha of it. Like, what does this exchange flow tell us about volatility? What does it tell us about price? Obviously, it puts, less selling pressure on the price when there's less reserves. And so what does that look like from a model perspective on how people can maybe see some signal in the noise there?
Exactly. Yeah, this is, we're gonna show a really good example. I would say a textbook example of why you need to be, like, monitoring inflows into exchanges. It's not for Bitcoin, but it's for this token, Yearn Finance, or Y Finance is the ticker. And so in the last, let's say in last month, we've seen, like, this is the price of Y Finance, right? So it just surged, right, in a matter of a couple of weeks. So almost, more than double in a couple of weeks. So, okay, so you see the price, right, rising, but we're tracking also inflows from we track inflows to exchanges for a lot of tokens. And so you see how as the price surges, then you start to see, like, more inflows and more inflows into exchanges, right, from this token. And so that's the first warning signal, right, that okay, there's more tokens coming into exchanges. So it could be like people see the increase in price, and then they say, oh, I want to sell, right, because I can earn a really big profit. And so, interestingly, you can see, like, the volumes are not in normal levels, which, because you see the inflows in any other period is, like, really, really flat, right, basically, and then you see the big inflow, right? So that's the first warning signal that you can say, oh, I'm seeing more inflows into exchanges. So that could mean, like, okay, is volatility coming? Is price going to do something, right? And of course, now we can see that the price dropped like 50%, after we saw the first, surge in inflows, right? And so that's the first
like the old pump and dump there scheme, huh?
Yeah, it could be. I mean, I don't know what it is, but you can be tracking like what people are doing. Like, okay, these people, they want to cash
Yeah, it's
out,
the old
right?
supply and demand type thing. You know, more supply on the
Exactly.
market, they're going to sell it and they're going to take profits, and then they're going to, you know, don't get left holding the bag. And so monitoring these different levels is a very important metric in figuring out on-chain analytics.
Exactly. And especially when you see like inflows really
Like,
going to levels, you know, above by much here, above what it normally is, right? And then this is the same chart, but here we're showing trading volume, right?
yep,
So you see that, okay, more inflows and then more trading volume, right? And so that's you know, the sign that, okay, more inflows can be related to then more trading volume, and then, you know, like, okay, volatility is gonna come whether to the upside or to the downside, right? But it's a, you know, the flag, right? The alarm. The inflows sound the alarm
yep,
first.
yep. Sound the alarm, and you can set up alerts. We can show you
Exactly.
guys how to do that.
Yep.
And thank you, Julio, very much. We appreciate your alpha. We appreciate the research.
Yep.
Up next, we have our wonderful account manager, Ben Seislove. Ben's going to walk us through some interesting things today. And so, Ben, I'm going to hand it over to you and let's see what we got today.
Yeah, I thought today would be a really good chance to show some of the custom analytics capabilities. Julio went into like pretty good detail on Binance as an exchange, but as we know, like Binance as a whole includes their exchange and also Binance Smart Chain, their network. So I wanted to kind of go through and show how I would approach using our platform to really view Binance as a whole and really specifically their Binance Smart Chain. So yeah, if you're familiar with CryptoQuant, you're going to find our chart section, which has preset metrics for Bitcoin, ETH, Clayton, and about 100 or so ERC20s. But today what I wanted to show you was basically where the data for Binance Smart Chain lies and a bunch of other chains. There's no need to know like raw coding or raw SQL. Everything you can do, you can click in, drag and drop metrics. So here, for example, like let's say I wanted to understand a little bit more about Binance Smart Chain. I'd go here into our chain section. You can see our support, Bitcoin, ETH, Polygon, other layer 1, layer 2s. I'd click on BNB, and here you're going to see all of the different metrics we have for it. So for example, you're going to see every little transaction on Binance Smart Chain. So that's going to allow you to create metrics like checking active users, number of transactions. Also, you have token standards. So if you're a DGen, you can track all your favorite BNB tokens, trading on PancakeSwap. I know we'll get into a little bit later, but there's quite a lot of activity on Binance Smart Chain that I think goes overlooked a lot, especially on Twitter. But yeah, you're going to find all this different data for Binance Smart Chain. And here I'll show you kind of how I put it together to show you a general sense of why maybe Binance Smart Chain is a little bit different than some of the networks we've seen. Obviously, FTX and FTT token was super popular in the news because they kind of fudged their reserves a bit within a liquid token. But I don't think it's necessarily a fair comparison to compare FTT to BNB because BNB does have its own ecosystem. They have obviously their own base layer. So like just very broadly, it's interesting to see, you know, active users and transactions on Binance Smart Chain. Like it's growing even throughout, you know, market downturns. So you're seeing activity growing, which is cool. But
And this
I
is
think
basically the token that allows people that trade on Binance to kind of use that as like their fee structure, correct?
yeah. So there's an incentive structure on the Binance platform for sure. But there's also like a lot of, you know, ecosystem activity on chain through, you know, different DEXs, lending, stable coins, because it is quite a bit cheaper and faster than Ethereum. So here's I think a pretty cool example just to show you like kind of the sheer power and like popularity of Binance as a network. So here, obviously, Ethereum was dominating until all these other different tokens. But this metric is interesting because you can see stacked the whole total transactions of all these different chains and what percentage of Binance Smart Chain makes it up. So you can see it honestly hovers around 60, 50, 40% consistently, even after introduction of all these different, you know, layer 1 and layer 2. So activity as a percentage of all these networks is actually pretty solid. And then even comparing, you know, active users, it's even more obvious. So that, yeah, Binance, you know, Smart Chain is a network. There's so much activity happening there. And I know there's a lot of like, call it maybe conjecture about BNB token online and certain levels of the price action and then, you know, Binance solvency. But in general, I think it's pretty obvious to say that, you know, there is activity happening on chain, real activity. People are willing to pay, you know, for block space on this chain.
Mm-hmm.
And then the last metric I wanted to show was basically showing how do you view a chain and basically view it a little bit more real, like what transactions are mattering, what ecosystems, you know, are actually thriving. So basically this is a ratio of transactions versus transactions that involve a token transfer on the chain. So like a stable coin, a different altcoin. And you can see throughout the time, obviously, as altcoins become more popular on different networks, it grows as a percentage of total transactions. But Binance, even on this metric, filtering out a lot of noise through maybe, voting transactions or smart contract deployments, they're still at the top of this metric. So really, I think as a summary, like there is real activity happening on BNB, and I don't think it's fair to probably equate it to the situation we saw with FTT.
Yeah, that's a good point, right? These are all different metrics you guys can put into your own formulas to evaluate risk, right? Well, we see like their exchanges drop, but we also see like, hey, like they have a very active ecosystem. There's a ton of traders on there. There's still a large player in spot Bitcoin trading. And so you want to take all those factors into consideration depending on how you're monitoring risk, and managing that with your firm. So no, these are all great charts and analytics that we can pull from CryptoQuant, right? So CryptoQuant.com. And so you can go through some other stuff there too, Ben. So we've got, that's where the insights and the research happens up top, where people can get alerts. You can set up personalized alerts to, set up whatever kind of metrics you want. And so here's where you would do it. Again, it's all kind of user-friendly with the UI. Any other comments about Binance? What do you guys think? You think Binance is here to stay from your expert opinion?
I prefer to monitor the data.
Very good answer from our head of research. I like that answer.
Yeah, I mean, definitely from what we've seen with Binance, from the charts that Julio showed and Ben showed with the BNB token as well, or the BNB chain rather, it looks healthy. And I think that a good way to understand it better is to just view it in relation to other exchanges as well, because there's definitely, more things happening, I believe, on other exchanges that are of concern. There was the Poloniex hack, HTX, their Bitcoin reserves are getting low. So I think, when you take it into context, Binance is performing relatively well, right? Considering that was one of the biggest fines, I think, levied on a financial institution in that regard. So
also, one comment, from the DOJ, like the ruling and the charges, they were charging for, basically it's compliance, right? Like they didn't do like a good KYC, but there's no charge for, oh, you're stealing customer money, or there's no charges for that. And so it was more related to compliance, to regulations, than you're doing like some FTX like things, right? And so that's something that it's worth mentioning.
From all of us here at CryptoQuant, we appreciate you guys tuning in, and we will see you next time. Thanks.